Okay, one more thing. I forgot to mention this to you. I sent this in an email. John, we have a poll question set up in the back end and ready to go. It's really, really helpful. It's just a question on what specific things they want to hear in terms of the audience. Feel free to kind of push that out at the first of the call, and Emily will follow your instructions.
Okay. Well, welcome everybody. Happy Wednesday to you. And on behalf of our intrepid band of small business travelers, we want to just welcome you here. And we're preparing for a great call here today. And I wanted to make sure and introduce a couple of my comrades in arms. I've got Jamie Bilbach from the Central SBDC and Lisa Hudson from the East Colorado SBDC.
Hi. Good afternoon.
Joining us here. Yeah, there you go. All right, and anyway, we want to just say hi to all of you. We're gonna kind of share it around today, and have been kind of leading the efforts to help get all this information to you today. And so let's jump over to the next slide. I want to make sure and give some shout outs to everyone else who's involved in this effort. So those of you who haven't met me before, I'm with Ogallala Commons and our Grow Seco initiative. And we also want to make sure and give the shout out to Civic Canopy, who's really been helping us with a ton of support on the back end. They don't get a lot of shout outs, but they deserve it. And then we've got a lot of support coming from the Colorado Office of Economic Development and International Trade, as well as the entire team from Startup Colorado. And then, of course, both the statewide SBDC partners and our regional SBDC partners, which I just introduced to you, and they're going to be helping out here today. Let's jump over to the next slide. Just to give you kind of an idea of what to expect today, we're going to start off. I'm going to turn it over to Lisa Hudson, who will be introducing Mike O'Donnell from Colorado Lending Source and Patrick Reisler from RLR Certified Public Accountants to talk a little bit about everything that's unfolding with the PPP. And then we're going to switch over and have Jamie and Bill Dvorak just have a conversation that's more kind of drilled into a very local story and the local perspective from the business owner, before Lisa jumps back in to moderate the question and answer and close us down today. And so with that, I also want to really encourage everyone to utilize the question and answer function. We know that there are a ton of questions and not all of them may be answered today, but we want you to use that question and answer. Know that we will get back in touch with you. We'll follow up with everyone who's got questions, and we just want you to know that you've got some support behind you. There's a whole team of people who are interested in getting you the answers you need. And then the last thing that I want to do is let you know that there's going to be a poll, that we've got a poll that kind of lets us have some information. You should see it up on your screen now. Lets us know what it is that you'd like to hear more about. And so I'd like to just invite you to give us your thoughts on what you'd like to know more about today and in the future. So with that, engage, please, and enjoy the conversation today, and be watching for the follow-up. So we're going to leave that poll up for just a little bit, but in the meantime, Lisa, have at it.
Thank you, and welcome everyone to our great call this afternoon. So excited to bring to you the most up-to-date information we have on the PPP and Int'l. So first up this afternoon, we have Mike O'Donnell from Colorado Lending Source. He's the executive director, And just a little bit of background, in 2019, Colorado Lending Source facilitated 225 small business loans that created 1,405 new jobs. 1,405 new jobs. That's a lot. And had $330 million of impact. Mike received a Lifetime Achievement Award from the Council of Development Finance Agencies in 2019 for his outstanding contributions to development in the finance industry. So I'm really excited, again, to introduce Mike O'Donnell to talk about really the updates on the PPP and the Flexibility Act that we have coming in. So Mike, if you want to go ahead and turn on your video, if you have that available, and unmute yourself, take it away.
Thank you, Lisa. It's very kind of you to invite me back. And hi, everyone. I'm just going to give you some quick updates on the Paycheck Protection Program and how it's changed for the better. And really, there's really two sides to the Paycheck Protection Program. One is the front end as to how you actually apply for the program. There were a few changes there, but not that many. Most of the changes in this PPP extension program were really to do with how you obtain forgiveness. And really the intent of the Congress was to make it as easy as possible for you to obtain forgiveness. So I'm just going to start a little bit with some of the major changes at the front end. There was some legislation that was floating around that would have expanded the sort of range of businesses and nonprofits that could access the program. That didn't actually happen. In the extension bill that was pushed forward in the House by a vote of 417 to 1, so under pretty much unanimous consent by both parties in the House and very much by unanimous consent in the Senate, really simplified the process at the forgiveness stage, but made a few changes at the front end. And the big changes at the front end were really, let me sort of pull my notes up here. Essentially, it was really that when you got one of these loans, the loan had a loan term of 2 years. So essentially the intent was that there would be forgiveness for the first 6 months and you would start making payments in month 7. The interest rate was set at 1%, so very attractive financing. What the Extension Act has done is actually changed the term from 2 years to 5 years. So anyone who gets a paycheck protection loan on or after the 5th of June automatically gets a 5-year loan term. So, and the deferral period has changed a little bit too. And I'll address that in a second, but I wanted to reemphasize that automatically anyone from June 5 on, and this program does expire and continues to expire on June 30th. So you've got 20 days if you haven't applied for a paycheck protection loan to get your application into a bank or a nonprofit lender like ourselves. And Colorado Lending Source, we've processed about 550 of these paycheck protection loans so far. About $32 million worth of loans. So we're nothing like a big bank, but we've been able to process a lot of the projects for small businesses who can't find banks or are just too small for the banking system to work with. So again, from June 5th on, all of the loans have a 5-year term. If you got your loan approved prior to that, you can request from the lender that you modify the term, but I wouldn't do that now. I would wait till you go through the forgiveness process to see whether or not you actually have a loan, because now that the Congress has made it so easy for you to get forgiveness, you may not need to modify your term. And then the other thing is the payments, no payments for the first 6 months. What's changed there is that with the new legislation, it's extended the period of forgiveness on which it's calculated from 8 weeks to 24 weeks. If your loan was approved prior to June the 5th, you can still use the 8-week period to determine your forgiveness. If your loan was approved on or after the 5th of June, you now have 24 weeks. And you also have that as a choice instead of 8 weeks if you had that opportunity to get your loan prior to that date. Now, the way the new legislation has worked, set forward, it says that your deferral period now is a function of when you apply for forgiveness, when the bank actually gives you or actually writes off that amount that you've requested forgiveness on, and when the SBA, the Small Business Administration, reimburses the bank for the forgiveness that they provided to you, that is when your loan payments will start. So assuming, let's just assume you got a loan today, you've got 24 weeks, you've got 6 months to actually go through the process of expending the funds. And the one thing that changed there is that as long as 60% of the funds that you're spending are on payroll-related costs, which you should be able to do over the next 6 months, then you can maximize your forgiveness. Or you can wait till 12/31 And if you've brought everyone back by then, there's some other exceptions. I can go into the details, but it's really, really easy now to maximize your forgiveness and get 100% forgiveness. So if we assume that you get your loan now, you've got that 24-week period that you go through during which you spend the funds to maximize your forgiveness. You then apply to the bank to have your loan forgiven. The legislation says the bank has up to 60 days to process that. And given that there are so many of these loans done around the nation, there's probably be a little bit of a backlog processing them. And then the SBA has 90 days to reimburse the bank for whatever they forgive you. So there's another 2 months there plus another 3 months. So potentially you could be starting payments on this loan if you don't have funds forgiven as late as 15 months after you receive the funding. If you do not apply for any forgiveness, the new legislation says that you still have that. We have to wait 10 months after the 24 weeks. So essentially the earliest you'll actually be making payments if you don't apply for forgiveness is in month 16. So some really interesting developments at the front end of the program to really spread it out so that if you don't have something forgiven, you're really not making any loan payments until well into the loan. So it really provides you with a lot of cash savings to the back end. If you've got a really large paycheck protection loan, that would be the time where you might then work with your lender to try and get that loan extended from a 2-year period, which it was initially, to the 5-year period. And that's going to be an issue for probably a lot bigger businesses that might be on this call. But I wanted to give you that really quick overview. I know that there'll be lots of questions related to that. Really nothing's changed in terms of, what you're eligible for in terms of your payroll. The one big thing that we don't have guidance on, but I suspect we may not get guidance on, is that you're still able to borrow 2.5 times what your average monthly payroll was last year. If you're a sole proprietor or an independent contractor filing a Schedule C, you automatically get forgiven 8/52 of that line 31 of your net income on your Schedule C. That probably won't be extended out to 24 weeks. So I think that you'll probably still see that, but you'll have time during those 24 weeks to spend additional funds on the use of your car or utilities that your business have, again, to maximize your forgiveness to get up to like 100%. So I'll give you that quick overview. I know there'll be lots of questions and I'm happy to address them, but I wanted to just hit some of the highlights. There's a little bit of confusion out there around what it will look like. We still don't have guidance from the SBA, and to be honest, I hope they don't give us much guidance because the Extension Act is actually very self-explanatory. Again, summarizing, you've got a longer term. If you apply for a new loan, you potentially can extend the term if you applied for a loan prior to the 5th of June. The interest rate's the same. The forgiveness period is extended for everyone, just depending on when you actually apply for forgiveness. If you use the 8-week period and you apply, you could probably start making the loan payments at the end of that 6-month period. But the reality is, you might want to wait until the end of the year and take advantage of this 24-month period. And then not a lot of changes otherwise, other than the fact that the program becomes a lot more friendly to small businesses so that they can maximize forgiveness. And with that, I'll hand it back to Lisa to be in charge, and she can usually, do hand gestures at me to tell me to be quiet if I'm talking too much.
Well, thank you so much, Mike. Really appreciate you joining us again today. And just a reminder for all of our attendees, you are welcome to utilize that Q&A box to ask any questions. And towards the end of the call, we're going to address all of those questions that are coming through. So again, at the bottom of your screen, there's a little icon that looks like chat bubbles, and it says Q&A. Just press that and type in your questions. So thanks again, Mike. And we're going to move on to our next speaker. I'd like to introduce Pat Reisler. Pat has been sitting on the East Colorado SBDC Advisory Board for several years, him and his partner Scott, and really excited to introduce you to speak on behalf of experiences that your clients have been facing with tracking PPP and questions that you've seen come to mind with them. Pat has began working for RLR LLP in November of 2013, managing the firm's Greeley and Evans office, and he became partner on January 1st of 2019. He has 15 years of tax preparation and planning, accounting and consulting experience with individuals and small businesses in a variety of industries. And additionally, he has growing expertise in oil and gas and international tax issues. So thanks again for being on the call, Pat. I'll let you take it away.
Thanks, Lisa. So overall, I kind of share Mike's sentiments with the new act. It was a relief in a lot of ways because we were already at the point of we started helping our clients as early as the first part of April, late March, obtain the PPP loans, and so they were already at their 8 weeks by the first part, end of May, first part of June. It did provide us a little bit of uncertainty in the short term where the House had passed the bill, but we were waiting on the Senate and waiting on the president because we had people that 8 weeks came up on June 8th, which was Monday. And we're like, well, we've got this much PPP left to spend. What do we do? And ultimately kind of had to make a call on it before we could wait for the government to kick it in. But the biggest thing with us is just the planning issues that are involved in it. We're looking at, we were looking at a pretty busy June, July as everybody's PPP 8-week period came up, trying to navigate through the helping clients with the repayment or not the repayment, but the forgiveness applications, and still not really knowing entirely what those look like yet. There's some guidance out there from the SBA, but we're kind of expecting each bank to tailor their applications in a slightly different way because ultimately the banks are the ones that are going to be the first level of determination for the forgiveness, and then it goes up to the SBA for final approval. But it raised a few interesting points with some of our clients. A lot of our clients are small, one owner, maybe no employee type businesses where they've got just themselves on a payroll, like a single owner S corp. Those weren't too hard to get. Those aren't too hard to navigate because you've got, your full-time equivalent employee doesn't change. We may have taken them off payroll for a month or two while things were uncertain, but it was pretty easy to get them back on to get the PPPs, at least the amount of the PPP paid out through the 8-week period where it was where we needed to get the funds paid out, and those we're not too concerned about. We have a lot of those coming due, and but what we're talking to some of our clients on is actually deciding whether or not to continue with the 24-week or continue on and elect the 24-week program, or try to stick to the 8-week initial election. The issue being, things have seemed to calm down quite a bit and things are kind of getting back to normal, but things can pivot pretty fast, and we don't know what the next, we hope things are going to continue to get back to normal, but we don't know what the next 4 to 6 months are going to look like for people. Are we going to continue to be able to rebuild the economy and get back to normal? Are we going to kind of have a relapse at some point this fall? There's a lot of speculation out there. So what we're trying to tell our clients mostly is yes, the 24-week thing was a nice relief. It gives you an extra 4 months to get funds paid out. There was initially some confusion on the interpretations of this bill, where it was kind of interpreted up front where if you elected the longer period and the 60% versus the 75-25 that most of us were running on, if you didn't meet that 60%, it was a cliff, and then the entire amount was there was no proration. It was just an entire amount due for repayment. That was kind of the fear that came out last week, and now reading through some stuff, it sounds like there's going to be a little bit of rewording on that to where it's going to be treated approximately the same way the 75-25 was, where if you don't meet the 75%, there's going to be some proration of what you owe back, but you're not going to owe your entire loan back. So that was the first piece that we were kind of fighting with, but it looks like we're okay there. The second piece is some of our larger clients that, knowing they only had 8 weeks to pay back their PPP loan, were paying employees that weren't necessarily working a whole lot, which, the furloughed and hazard pay type payments are allowed under the PPP as long as they don't exceed 100,000 for the year for any one given employee. But where we hit the end, trying to kind of navigate that with the maintaining and they were doing that to maintain their full-time equivalent employee base for the end of the 8 weeks, knowing that after that repayment was up, that they may not be able to maintain that full-time equivalent number. So that's, something to consider when you're looking at the 24-week period is, yes, you may be able to get your 60% paid to payroll. I don't think that's too big of an issue for anybody, unless you're still not in operation or in very limited operations. But the bigger question is not knowing, are you going where you may have the full-time equivalent numbers now? Are you going to have them 24-week at the end of the 24-week period if things get dicey again, or if we kind of have to pull back and limit the amount of contact people can have and limit our economic impact again. So that's another thing, that we're toggling with people is, maybe that does give us that opportunity, but are we, if you've already paid out 90% or 85% of your PPP loan and you've got about a week to go to hit the 8 weeks, is it better to just pay that down, get your 8 weeks and get it forgiven versus rolling the dice a little bit? Yes, you'll get the whole thing paid out, but is there some other factor that might limit you in being able to receive a full forgiveness? The last thing that we're working with, and again, it's usually on the larger loans, for companies that are struggling a little more and having an issue, beyond payroll, just paying bills, is do you push to, now that they've extended the loan term from 2 years to 5 years and given you a longer deferment period before you have to start paying, is it really worth flushing all that cash out in 8 weeks or even 24 weeks, not knowing what the long-term ramifications are going to be for you as far as what your cash flow is going to look like? Or do you hang on to some of that knowing that you're going to have a deferment period and then have 5 years to pay back a 1% interest loan? So that's while we try to encourage everybody that is able to get as much forgiven as possible, there's also the overall issues with operating cash and keeping some working capital on the chance that things don't recover quite as quickly as we all hope they're going to, and being able to stay afloat a little bit longer than if you pay it all out and you get it forgiven, great, but you also have already paid it all out and you don't have any cash left. So those are the big things that we're looking at right now. And obviously we're still waiting on some clarification on a few things. Like Mike said, hopefully they don't issue too much clarification because things are fairly cut and dry. But now we're just kind of going into what we call phase 3 of our program. Phase 1 was obviously getting helping people get the PPP loans. Phase 2 was helping them figure out how to spend it, adjusting payrolls for people, balancing out the 75-25 with rent, utilities, other things. And now phase 3 is helping people with the forgiveness, which I think we're probably still a few weeks out from having much clarification on that. But those are kind of the things that we've run into. Obviously, there's many more issues that have come up with this and will continue to come up with this. And I doubt that this is the end. I would imagine that there will be more guidance and more things that come from Congress, and potentially even more stimulus packages, depending on how fast the economy recovers or doesn't recover. So I will let Lisa take over again, and I welcome any questions you may have. I'll do my best to answer them. If I can't answer them today, I will do some research and try to get back to you. So thank you.
Thanks so much, Pat. Really appreciate it. And we do have some questions coming through. I'm going to turn it over to Jamie at this point.
Hi, everyone. Thank you for joining us today. I'd like to introduce Bill Dvorak. He's with Dvorak Expeditions, and they've been a family-owned and operated business since 1969. They offer a wide range of Colorado whitewater adventures, including whitewater rafting trips, guided fishing trips, whitewater rescue courses, paddle school, and a variety of rentals. They operate on many of our Colorado's rivers, such as the Arkansas River, Colorado, Dolores, Gunnison, Green, North Platte, Rio Grande, and San Miguel rivers. So Bill, thank you so much for joining this call. We wanted to kind of bring in a local business that's had to navigate the PPP program and do a bit of Q&A with just Bill and myself, and then that'll open up to Q&A for everyone. So Bill, what obstacles did you face when the COVID pandemic occurred? And can you give us a little history about you as a business owner, how you address this, and also a little bit about now that you're reopened, what's that looking like, and how you foresee your summer sales? So please, Bill. I think we need to unmute. Is Bill there? Well, should we wait a few more minutes, team? I know he was here a moment ago. Well, how about we take a few questions that you have? Lisa, I'll pass it to you, and then hopefully Bill will be able to rejoin us.
Sure. So we do have a question on the line, one that's still open, and it says, any idea whether the PPPFA changed the at least biweekly payroll requirement for the alternate 8-week period? Specifically, can businesses who pay twice a month now use the alternate 8-week covered period?
And the answer to that is yes. A few weeks ago, the SBA issued guidance that you weren't confined to the original 8-week period, which started on the day that the loans were dispersed. They allowed businesses to use an alternate period of 8 weeks, really starting on the very next payroll period. So that would work. And the alternate period is certainly effective for the 8-week period. If you're using the 24-week period, which you have to do if your loan has been approved since June 5th, you've got plenty of time to mesh all of those together.
And I'm going to go back to one that we answered while another speaker was presenting, because this is a question that we commonly get at EASCO SBDC. This person asked, the bank that we went through for the PPP loan sent us a forgiveness app, but said they don't recommend filling it out yet. What do you know about this? And Mike, you responded. Do you want to go ahead and chime in for the rest of the attendees to hear this answer as well?
I will. And what the SBA has produced is a form, and excuse me for getting the name, but it's something like a 3018 or a 318 or something. But it's an 11-page form that you complete to apply for forgiveness for a paycheck protection loan. It was created very much like an IRS form where you go through all of these series of questions. There's a worksheet that leads back into a template, which then feeds back to a different page where you calculate all the different sort of calculations. When the SBA released this form, they didn't really provide much guidance other than the instructions that appear on the form. Again, it's predicated on the 8-week approach. It was intended to be an initial form to at least get people thinking about what they had to collect. And again, there was a lot more record keeping and reporting. It did require the 75% rule, which was an SBA invention. There was never a 75% rule in the CARES Act, nor did Congress intend that there would be. So essentially, a lot of those things, this latest act was Congress actually providing oversight and direction to the SBA to tell them to back off and stop being so complicated and tricky. So I anticipate that this form may get modified or changed. It will have to get modified and changed because of the 24-week rule. And so it's a guideline, and it's probably worth looking at and sharing with your financial advisor, your CPA or accountant. But I wouldn't submit it yet. You know, one of the guidance the SBA has given us as an SBA lender is that we should be looking for the 941 forms for Q2 to evidence the fact that people are spending funds on payroll. But of course, you know, Q2 hasn't ended yet, and you're probably not going to file that 941 until sometime in July. But again, you know, it's a suggestion, it's not a requirement. But every bank is going to be a little different in terms of what they want or what lender will want in terms of to process the forgiveness request. But if you can fight your way through this 11-page form, power to you. But if you can and get that back to your bank, then the bank has really 60 days for them to actually review and to process it, which they may do. But we haven't received.
Thank you.
We've done more than 500 paycheck protection loans. We haven't seen, and we weren't exactly, you know, off the ground in day one like the banks were, because we had to raise the funds for us to make the loans. So we don't have any that have come up to the 8 weeks, but we haven't seen any that are close to submitting yet. And again, from the perspective of a business, especially a business that's been shut down and hasn't been able to bring employees back, you know, one of the new provisions in this extension say that if you can't find people to bring them back, or there's reasons why you can't, that's what the SBA calls a safe harbor, in the sense that it doesn't prevent you from maximizing forgiveness. And if you can bring everyone back by 12/31 of this year, you again get maximum forgiveness. So there may be reasons why people may not want to fill it out and get it in straight away. I would wait for a little bit more clarification and a better designed form than the one that they used. That would be me.
Thank you. And it looks like we've got Bill back. So Jamie, I'm going to pass it back to you.
So can you hear me now?
Yes.
Yes, you can? Okay. So Jamie kind of outlined like what kind of things we were dealing with. And again, a lot of the stuff was just the unknown about whether or not we were going to have a season at all. But when I found out about the Int'l grant, I applied for that in early April and actually got funded on the 20th of April. And I'm still not certain whether it's considered a loan or a grant. When I applied for it, it was as a grant. And in the meantime, we went ahead and filed for the PPP stuff. And we actually got our initial funding on the 30th of April, but it was under the original guidance. And under that guidance, we only qualified for a small amount. And then we have an outfitter conference call with our Arkansas River Outfitters Association every week. And we found out that some of the outfitters down in the Canyon City area were able to go back to their bank when the new guidance came out, and you could figure out your payroll for a longer period of time than initially, and were able to get a modification to their loan and got the higher rate. We tried to do that with our local bank here in Salida, and they were very reticent to do that, but enough of us started to contact them, and I guess in the end, they figured out how to do it, and we finally qualified for a larger amount on the 15th of May. And to be real honest, I wasn't sure if I was just going to use it as a loan or for payroll, because I wasn't sure what kind of a season we were going to have. And I didn't actually start my season until June 1, after I saw the guidance come out from the governor, and things like we could operate at 50% capacity of our vehicles instead of 30%. We could have more than 4 people if they all were the same family. A bunch of different issues sort of made me think that maybe we were going to be able to have a season at all, but I still have kind of held back. I typically have about 12 employees, and now I'm at about 6 employees. And so I don't know how that's going to work. I'm very confused about the full-time equivalent and how that works for us. The biggest thing that I think happened originally with the COVID was we had a ton of cancellations. We booked quite a few trips in advance. So we had trips that had booked back in January and February and March. And then all of a sudden, when the COVID stuff came out, we had to start actually refunding people money, which was very difficult at the time, because you don't have a lot of money as a small business. You tend to use what you have for necessities, and so to try to come up with that money for refunds was very difficult until we did get some of this money from the government. And so probably the biggest thing that we dealt with and we're continuing to deal with is just this changing guidance. And one of the things that I'm not sure of, originally we were on the 8-week period, and I'm told that you've got to make an application if you want to carry that over to 24 weeks. And because we're a seasonal business and it runs basically from May through early September, the 24-week period works much better for us than say just May and June. So there's a bunch of questions that we have about those kind of things. And it's just a process. It's a lot of paperwork, and it's taken a lot of time, and there's been a lot of us who have cooperated and worked together. I've worked a lot with Jamie to try to get clarification on how to actually do these things. And I guess the next thing will be clarification on how to actually qualify for the forgiveness and go from there. Did that answer your questions, Jamie?
It did. And hopefully Mike will be able to answer some of your questions still in a moment. What is your strategy? Because you don't have these questions answered, do you have a strategy of how you will use the PPP funds? And how you think the new rules have made it much easier for you?
Well, again, I think, we're going to continue to employ the people that we have. And if there's demand, we'll employ other folks to help us out through the rest of the season. And, it's one of those things. I think it's really crazy down here on the river. The last 2 weekends, you could not find a place to park at our put-ins and takeouts, but it was all private boaters. There was very little commercial use. And we actually had a little poll amongst the outfitters, and also with the fellow that takes photos of everybody that goes down the river. And he pretty much says for the weeks of May and June to this point, commercial use on the river is off 50%. And those are similar numbers to what we had back in the droughts of 2012 and 2002. And 2002 wasn't really that bad until our governor said the whole state was on fire. And then our bookings dropped and a lot of cancellations happened. So what happens on the state level really has an impact. And I think we've worked very closely with the Colorado Tourism Organization, that they know that, how to kind of make sure that they don't do anything that's that detrimental to any industry anymore.
I know I'm also on the Chaffee County Visitors Bureau, and the travel is down 45% still in our state. So, but hopefully all us Coloradans will start going rafting this summer.
Well, I think there's plenty of people that want to go. It's just a matter of, I think people are still a little bit on edge as far as, is it a risk or not? And so we just need to sort of minimize that risk. And I think all of our companies in a row are doing everything that they can to minimize those risks, as far as following all the protocols. Like in Chaffee County, we actually had to go through a process to get certified by the county that we could be open for business, and we have to comply with all the things that we said that we would comply with to get that certification. And so I guess just getting the word out that recreation is safe, and I think people want to do it. It's just a matter of, assuaging that risk that they're worried about.
Are you taking steps now? Because I know as an SBDC center, we're pushing keeping records. What are you doing to prepare for PPP forgiveness now? And what documentation are you kind of planning on supplying your bank? Have you talked to the bank about that?
We have put all that money into one separate bank account and are just writing checks for business expenses and for payroll out of that. And we were hoping that that is the kind of thing that we need. We're a little bit confused about some of the new guidance as far as have they opened up some of the interpretations of what actual business expenses are, and that's never been clarified to us as far as is transportation an actual business expense that you can claim against this, or is it only leases and rents and that's the stuff that was originally in the original bill. And we're still a little confused about what is actually going to be considered a business expense. But anything that we're spending on our business right now comes out of that particular checking account so that we actually have documentations of what we've spent it on.
Wonderful. And lastly, I know you and I did work together on PPP and Int'l. Why did you reach out to the Central Mountain SBDC?
Just because it's such a confusing process, and I'm a river guy. I don't do real well with a lot of those kind of detailed logistical things, which is probably why I lost this thing earlier on this computer, because I probably hit the wrong thing at the wrong time. So I'm not a great IT guy. I'm more of an operations kind of guy. I like to run the rivers and run the business, and I don't do a whole lot of stuff with computers, and I'm not very copacetic or literate about those kind of things. So I guess that's what I reached out to you for, Jamie, was to help me understand the stuff.
Thank you for doing that. And before we open it up back to Lisa and Q&A, I wanted to find out, Bill, and it sounds like you had several questions for either Mike or Patrick, but do you have one real strategic question that you would like to ask either Mike or Patrick before we pass the baton?
I guess the most strategic question I have is, we got the money back on basically the end of May or end of April, early May, and that was when we were on 8 weeks. Do we have to do anything to convert over to be on a 24-week period? Or is that automatic?
It's Mike here, and it is actually automatic. There's nothing for you to apply there. You've got the choice, because you were prior to June 5th, you could stay with 8 weeks, or you can now go to 24 weeks. It's entirely up to you, whatever makes more sense for you.
And she only asked me for one, but is there any place that we can go to find out what the clarification is on what's acceptable in the 40% of business expense?
Again, the way the Act is, and I can give you that information too, the percentages are all just random numbers that the SBA invented, but essentially the Act says that any funds you borrow under the Paycheck Protection Program can be used for anything payroll related, so any costs related to your employees, including state taxes that you might pay on their behalf, insurance, 401ks, all of those sorts of things. It's all rent related to any pre-existing leases that you have prior to the middle of February. It's all utilities, and utilities is a little vague, but essentially any utilities like phones or internet or stuff that you have related to gas utilities, all that sort of stuff. And then any interest on existing loans that you had for the business prior to the 15th of February. There was some legislation proposed that would broaden that range, but that was the legislation that didn't get through the Senate. So all we're stuck with is those original 4 purposes. Now, the SBA did clarify that if you're a sole proprietor and you use your vehicle as a sole proprietor, that is considered a utility under that definition of a sole proprietor. Use of a vehicle is probably not something that a business has unless you are paying your employees to run their vehicles, which would be considered an expense that you pay your employees and therefore would be part of payroll. So that would be fine if you're giving people car allowances. paying them for mileage reimbursement, all of that would be eligible under the Paycheck Protection Program, if that helps a little bit.
But not the transportation that we utilize to say, take our clients to and from the river. That wouldn't be count.
No, if it's a transportation for your employees, that would be okay. But if your customers, that would not be eligible under at least my reading of the Act.
All right, thank you.
I'm about to pass it over to Lisa, but I have a question on that. If now we're up to 60/40, then Mike, he could use those travel expenses for customers and stuff under that 40%, correct?
Well, the Act says that you can theoretically only use the Paycheck Protection loans for funds for those four things: the payroll, the rent, the utilities, and the interest. So it says you can't technically use that fund for anything other than that, like working capital. But if you've now got 24 months to build up to that number of whatever you've borrowed, that would hopefully free up some funds that you would normally spend on payroll to actually do those sorts of things. So the intent is you perhaps can shuffle the funds around, but you can't technically claim forgiveness for funds that you spend on that. You know, the idea of these ratios is that there are many, many businesses that have a lot of expenses, and rent for a hotel, for example, is probably a bigger expense, or interest and mortgages are bigger expenses for hotels than many times their payroll. So you can weight those expenses so you maximize that. And now that you can spread them out over 24 weeks, that gives you the chance to get to that 100% forgiveness by, as long as you keep the 60% or so of that as payroll.
All right, thank you. And I'll pass it back to Lisa. And thank you, Bill, for joining us. And Bill will be here for Q&A too, if anybody has questions for him.
Bill, we actually do have a question for you right off the bat. So one of our listeners was asking that you had mentioned that your initial PPP amount given in April was a lower amount, but then the guidance changed and you were able to get an increased amount. Can you further explain on that?
Well, again, when the original guidance came out, it was like based on, say, January through a certain period of time, which I think was only into maybe June. And we're a seasonal business. So I'll just give you numbers. When we got that money back on what that was based on, it was only about $16,000. And then if we were able to go ahead on the new guidance and go through our whole season into September, it increased by about fourfold. Hopefully that answers the question.
And I'll expand on that just a little bit too, because when the Act was created, people had the choice of looking at what their average payroll number was using different periods. And so if you've been in business for at least the last 12 months or so, you could choose all of 2019 to cover an average payroll. You could use the period from March of last year to February of this year. And if you're a seasonal business, the Act specifically said you needed to take a 12-week period sometime between the middle of February last year and June of last year. And then eventually they realized that, just like Bill's business, there are many businesses that are very seasonal around summer, and whether you're on the river or whether you're doing camps for kids or whatever. And so they've changed that period. You could pick that 12-week period anytime from the middle of February last year through to the end of, or the middle of September last year. So you could pick a period that was more representative of what payroll that you actually make. But because those rules weren't in effect straight away, it took a while for them to work out that, oh, there's a lot of seasonal businesses that don't work, that don't finish up in June like others do. So that was a correction. And so Bill and many of the other businesses you referred to were able to go back in and get modifications to their loan so that they could get a much larger loan, because the period that they were looking at was more representative of the payroll costs that they have.
Now, this next question was answered in the chat, but I want to bring it up because I think other people will want to know this too. And it was, is there a calculations worksheet for us to keep track and give to our lender? And another part of that question was about the payroll taxes, personal payroll taxes. Are they able to be included? Pat, you went ahead and answered this one. Do you want to chime in and share what you have for that calculations worksheet?
We have something. I got to dig it up. It was circulated through the office with, in emails, but I've probably seen about 1,000 PPP emails in the last 3 months. So I do have something I can find, and I can share with you or somebody else to distribute if that would work. But yeah, off the top of my head, I gotta go find it because it's buried somewhere. But it's
Understandable. The inboxes are a little out of control these days, so I totally understand that.
there was a period of time, there was a period of time there at the beginning of the PPP when we were getting 200 to 250 emails a day. So my memory's a little shot right now. But go ahead.
Thanks. And it sounded like the rest of that question that you the payroll taxes you withhold on the employee side is forgiven, just not the employer side. Is that correct?
Yeah, so it's
taxes?
it's essentially figured on the gross pay that you're paying your employees. So not the net. So the or if you want to go from backwards, it would be their net pay plus FICA and Medicare that was withheld on their behalf, federal income tax withheld on their behalf, state income tax. The only pieces that really aren't eligible for the forgiveness part are the Social Security, the half of Social Security and Medicare that the employer is responsible for. And as Mike mentioned, I believe you can take the unemployment taxes or other state type taxes that you pay that aren't necessarily withheld from the employee's paycheck, but that you pay on the employee's behalf. So really, it's just the employer's side of FICA and Medicare that you can't use in the forgiveness piece, and also wasn't factored into your original loan when they were using the 2.5 months of payroll to figure out your number. So.
Thank you. And we do have quite a few people on that may be single owner businesses or sole proprietors. And one of the questions from a previous call was, can you still use the 75% for salary if they're a sole proprietor rather than going to the 40/60 limit?
Yeah. Oh, Mike, are you chiming in or?
No, I'll let you jump on that one. Yep.
Yeah. As long as you had your loan before June 5th, you can do either or. You're not automatically beholden to the 24-week rule, but you do have the option to go to the 24 if you want to, and the 60/40. But yeah, you can still do 75.
And I might just add there too that, because the way the sole proprietor is a Schedule C person, their payroll was calculated on their line 31, their net income number. And so they would get that number divided by 12 multiplied by 2.5. And you'd add, if you had employees, you'd add in those costs as well too. But if someone didn't have employees, it was just pretty straightforward. It was, your line 31, divided by 12 multiplied by 2.5. And then under the forgiveness, you could get 850 seconds, which is 2 times what that number is. So it automatically gave you the ability to recover, 75% of whatever you got as a paycheck protection loan without doing anything. And then you could add that extra bit by looking at the cell phone that you might have for your business, or how you use your car in your business, or other direct expenses that are tied to rent and utilities. And so it was a very simple process for a sole proprietor, and still is. So that 75% rule didn't really make any sense for that, because it was already in effect, because you automatically got 75% of whatever you claimed automatically forgiven. So, the application didn't. But under this new thing, I don't think that 850 second number will change. I could be wrong. The SBA hasn't said anything about that. But I think you'll still automatically get 75% of whatever you borrowed forgiven. And then you really just need to make up that last 25%. So I think you'll be fine. It's actually so simple for a sole proprietor or a 1099 person to get the forgiveness. And now it's become a little bit easier for the rest of the businesses, but it just might take a little bit longer for them to get to that level.
So let's talk about interest. So does the PPP loan start accumulating interest from the date of funding? And a secondary part to the question, where can you find an application for the loan forgiveness?
You could probably search for the application. The SBA issued a few weeks ago their forgiveness form, their 11-page form, and you can probably find that. The interest question, you're right, the interest does start accruing at the date that you receive your funds. But when you seek forgiveness, you'll get forgiveness not only on how much you're actually spending, but all of the interest that's accrued up until the date that your forgiveness is actually processed through to you. And then when the SBA reimburses the banks, because of course the banks have to spend money to lend it out, the banks will get reimbursed up to the date that the SBA actually pays them back and contributes funds to the banks, which again, under the new rules is when, if there's any money that isn't forgiven or any funds that aren't forgiven, that's when the end of the deferral period is when the small business then starts to amortize whatever's left over, whatever remaining months are left over their term.
All right, and I think for the last question today, let's talk about the relationship between the PPP and the EIDL. So do you need to deduct the amount of an EIDL loan or the EIDL advance received from the PPP loan amount?
Excuse me, jumping on and off here, but essentially the way the EIDL advance, which was intended to be a grant and then turned into an advance, that, according to the SBA worksheet, is deducted from whatever the forgiveness amount is, or was to be deducted from whatever the forgiveness amount is to reduce that forgiveness for someone who got a PPP loan. You can't use the EIDL funds and the PPP loans for the same purposes. And if you do, then the PPP loan can refinance the EIDL loan. If you got the EIDL loan first for payroll and then you got a paycheck protection loan, the lender should have actually refinanced that EIDL loan into the paycheck protection loan. They could have added that to your payroll number, and that would have been a lot less expensive for you and also maximized your opportunity to forgive the loan. But my understanding is that at least up until June the 5th, when we passed this new regulations, that if you did get a $10,000 EIDL advance and you say you got a $100,000 PPP loan, then the maximum forgiveness you could get under the PPP program was $90,000. It would be 100,000 minus the 10. So that was how the rules were and still are until we hear that they're different.
Great, thank you. And without seeing any other questions coming through that Q&A, let's go ahead and go to that next slide. But I would like to say thank you again to Pat, to Bill, to Mike for joining us today to answer these difficult questions that I know a lot of our small businesses are facing. At this time, I'd like to go ahead and just make sure to reference what's on this slide right here. Slides from today's presentation can be downloaded at the eastcoloradosbdc.com/disaster-relief website. You can view the recording to this webinar today at the Choose Colorado YouTube page. For more business resources, go to coloradosbdc.org/COVID. And for resources related to entrepreneurs and entrepreneurial communities, go to startupcolorado.org. It looks like we did have one more question come through. And it says, I was originally denied the EIDL, but just received something from the SBA that they now are processing my first application and disregard the second one that they denied. Is that normal?
You better not ask me. The government isn't normal as far as I'm concerned, but it doesn't surprise me. Let's just put it like that.
All right, thank you. So let's go to the next slide. Questions and call recordings, you can, again, go to Choose Colorado YouTube channel. You can find that by searching Choose Colorado on youtube.com. And if you still have questions, email us at startupcolorado or startupco@colorado.edu. And next slide. Just a reminder that Startup Colorado does have an amazing podcast that I'd highly recommend that you check out. You can do so by going to the Apple Podcasts for Apple or to the Play Music for Google. And the one that they're going to feature here is Crisis Solutions for Entrepreneurs by Entrepreneurs. It's a new podcast, and it provides a dose of inspiration and insight on how rural business owners are responding to the ongoing crisis. Other episodes are Money is Still Moving, Trinidad entices creatives with affordable housing, and New PPE Marketplace for Business. Again, you can subscribe today at startupcolorado.org/podcast. And I hope that you will all join us, not next week, but the following week on Wednesday at 3 o'clock for our next call. Or if you can't tune in at 3, join the Western Slope call at 1 p.m. Next slide. And again, I just want to thank you all for being here with us, joining us for such a great call about the Triple P. Thank you to Colorado Lending Source, Bill Dvorak with his business, and Pat Reisler with RLR. We'll see you in 2 weeks, Wednesday at 3 o'clock. Have a great one.
Thank you.